Hey guys, how's everybody doing out there? Sorry, this isn't really a lunch live stream, but I just figure we do a midday live stream or kind of a mid afternoon live stream. Jax is walking around the room looking for something to chew. I almost had to, uh, I almost had to adopt him out the other night. I don't know if you can see that, but my favorite hat, my Keep Austin Weird hat. I was doing a live stream. I was on a live stream and I wasn't paying attention for like 2 minutes, and I looked down and he's got my darn hat. Anyway, all right, guys, how's everybody doing today? Market looks a lot better. So let's look at the market. Boy, I was looking at IBIT earlier, which is Bitcoin, and I'm targeting 55 on that, but it's at 53.40 now. Man, that's been an incredible turnaround. All right, so let's see here. Let's look at the old SPY. See what we have going on. Jackson, what are you doing in there? All right, well, we pulled back right in a perfect area to buy. If we pull back further to here, that might be another area to buy. I think the bulls, I think eventually we're looking to take the SPY to 560. I'm not saying by tomorrow, but I guess it's possible. But not likely. Not likely. Possibly we just hang out here at this trading range at 540. There's a pretty good trading range between 536 and 546. Maybe we build this trading range out a little bit, but 536 being a good place to buy, 546 being a good place to sell if you were day trading on a scalp for this trading range. All right. Well, anyway, but I think for position trading or swing trading, I think a person could aim for next week for 560. But anyway, we'll see. All right. So that's the SPY. Here's the Qs. And we've already looked at Bitcoin. So that's pretty much the three we'll just look at. And then we can also just, over here, I have the most important ones on the top. S&P's up 1.8, NASDAQ's up 2.6, Bitcoin's up half a point, but then Russell right there is up 1.8, and then the 10-year. Now that's the 10-year yield, so down is good. So that's actually green as well. You know what I'm saying? Green in the sense that it's good when the yield is down. I need to do something different on that. And then I have gold. VIX. VIX is down. VIX being down is another example of something that's good. Even though it's red there, we want to see it. All right, so let's see what's going on elsewhere. I haven't even looked at the model portfolio. Okay, so let's look at my allocations. Here's the current allocations. More than 25% in GPTY, about 22 in ULTY. Maybe I should aim for 25 in each of those when I rebalance, and then aim for 20 in GDXY and 15 in YQQQ. And I'll probably take YQQQ back to 10 when and if we get above the 200-day, or maybe even take it back to 0, but probably take it back to 10% when and if we get above the 200-day on the Qs, but we're a long way from that. So I'm liking this little hedge that YQQQ is giving me right now. All right, so let's see how we're doing today. So on a numbers basis, it looks like I'm up, I don't even know how to read this. I guess 1 point. Well, it's the same either way, 1.12. All right, well, let's look at it graphically. Well, graphically, yeah, there I am. I'm up. Hi, Jax. What are you doing there, buddy? Hey there. You want to come see the show? Jackson, what are you doing there, buddy? Why don't you just calm down, okay? Come here. Let me see you. Let me see you. Come here. Let me see you. He's mean silly. All right. He knows when I get on the show, I can't punish him or react fast enough. So he goes around looking for something to chew on. Now he's over at his food bowl and it's empty. He's going to pick it up and bring it to me. Gosh darn it. Hang on. I'm going to put food in here. Sorry about it. I should have fed him before the show started. My bad. Okay. But anyway, there's what I'm up. The 60-40 portfolio is up 1.14, but I would have been better off today just to be in SPY. SPY's up 1.7. Bonds are up 17 basis points. So the 60-40 is up combination. Okay. So, but we can look, how am I doing the 1.17? How does the allocation help me, or how does it work? So GPTY is making me a full percentage point today. Remember, it's 25% of my portfolio. And if it's making me a point, that means it's up 4 points. And we're getting ready to look at GPTY in a second. So we'll see if it is indeed up 4 points, but we can kind of figure it is. Now look, ULTY is making me 60 cents and it's about a quarter of my portfolio too. So ULTY is probably up about 2.5%. GDXY is costing me today because gold's pulling back. We should have maybe looked at the gold chart. It's fine though. Gold's still, it's fine. There's that YQQQ that's my hedge thing, and it's costing me 33 cents, but it's doing what it's designed to do. At least it's not costing me more than my bullish ones are making me. I mean, that's the whole idea. All right, so let's look at GPTY verse. Probably everything's up. What did we say it's up? 6%, 4% or something? That's the Chippy verse. Here's the LFGY verse. LFGY has one stock that's down, and it's GME. GPTY does not have anything that's down. Planeteer is killing it, up 8.5%. Chippy's going to be the same story. There's Chippy. I mean, my Lord. My Lord, what a beautiful sight to see. All right, so now let's look at the index buffer report. All right, the index buffer report. The index buffer report is showing the same thing that I'm trying to show with my model portfolio allocation. Because I'm trying to show you this, and I'm trying to illustrate, hey, I made an allocation that's this percentages, and I do this much better or worse than the benchmark, but I have this much less volatility. It's the same thing you can, but I'm showing it on a portfolio level. I have these 10 funds mixed together in different allocations. But the buffer report, the index is showing you on a case by case, is saying, okay, well, if you had SPY-T, you're underperforming SPY just a little bit. It doesn't show you for a whole portfolio, but it pretend like your whole portfolio's in, unless your whole portfolio's in SDTY. I mean, and then you could say, okay, well, I'm up 2.9%, and what I'm supposed to be tracking is only up 1.7%. So obviously it's a good day for SDTY. Now it came in a little bit while we were talking about it, but it's still up 2.5%. Now we know why that is, and we know we would expect that too. We would also expect XDTE to also be up big. They do the same strategy. The XDTE's from Roundhill, and they do the same strategy where they're doing 0 DTE options, but they don't sell options at night. So they take advantage of the night effect, which is the market's tendency for big gap ups at nighttime. So anyway, and since they don't sell options, they are not capped. So if the market gaps up 4% like it did last night or whatever, it was up huge, boom, they capture all of that. And so does SDTY. And to be honest, Roundhill invented it, and SDTY jumped on the bandwagon, but it's been a big success. And Roundhill is actually outperforming SDTY a little bit today. But anyway, QDTE and XDTE do the same thing, but so does SDTY. And there's a QDTY, and then there's an RDTY. And they do the same thing. It takes advantage of the night effect. So all of these funds that I'm talking about right now, we would put in more in the bull market category. And they've been doing poorly lately. I mean, the past month, these funds have been getting murdered. But as we recover, they might be some of the, they should lead the way. All right. But they're the riskier funds. All right. So what else do we have? SFOL is killing it. You got to love SFOL. SFOL is real sensitive to volatility. Volatility's down. It's up big. Volatility's up. It's down big. Same thing with ZVol. Anyway, it's a great day for a lot of funds. Look at KQQQ. All right. Did you guys see that Retire was in New York? He was there with, was it Curve or Neos or somebody that, anyway, they have a new fund coming. Oh, Rex. I love Rex. And they have a new fund coming now called BMAX. And I didn't know what it was, but I want to see what it was. Well, we'll look it up right now. It's the Rex Bitcoin Corporate Treasury Convertible Bond ETF. All right. I don't want to get in the middle of that right now. I don't even want to. It just made me think. Congratulations, Retire. I bet that was a good time. But anyway, okay, back here. We're weaving around, but I haven't got us lost yet. We're keeping us on track here. I want to get to the part where we talk about some option trades here, and we want to look at the dark pools. But look at this XOVR. Of course, it's private equity. Just everything's going to be up today. It's really the more the things to notice is what's down, I guess, on a day like today. It's USOI. I hope XOMO isn't down, but it probably is. Let's check out the Yield Max Buffer report. Yeah, it is just a little bit, though, and not down near as much as the parent asset. Now, that's a good use of options right there and a good use of the buffer. And it perfectly illustrates what happens on a lot of days with these covered call funds that, the underline might be down 1% or 2% and the covered call funds only down a fraction of that. And you do that enough days, it adds up and it adds to your total return. It also helps if you have a few of these days like Tesla's having today where it's outperforming the reference asset, or parent asset on the upside. That's a beautiful sight to see also. But this is all good news. I forgot to show we got talking and I didn't show the dark pool stuff this morning. Okay, well, I'm pulling it up though. I'm pulling up the dark pool. I can say hi to you guys on that. I don't know. I don't know. I'm going to say TJUL because I hate to lose. And if I had to put all my money in any one fund, one hedged equity fund, TJUL, and there's a new one that comes out every month. TJUL is called JUL because it came out in July last year. It goes from July last year to July next year. There's ones that come out every month, but whatever that version is that comes out in the month you want to invest, you get that and you keep it. There's a 1-year version and a 2-year version, but you hold it for the whole time and you can't lose. So those are the ones I like the best. These other ones that are, but these other ones can be good too. It depends. To tell you the truth though, some of those ones, like I love Simplify and I want to like HEQT and I like Jay and I want to like Jay has a hedged equity fund. But anyway, I looked at a bunch of hedged equity funds, not just Jay's, but a bunch of them into 2022. And a lot of them in the 2022 pullback really didn't save any money. So sometimes the hedges, and I know why that was, but I'm not really super sold on some of them, other than the ones like T-Jewel that are just guaranteed where you don't lose any money. It's more like an insurance, more like an annuity at that point, because you're also sacrificing a ton of upside. You only get like 7 or 8% a year upside, because what they're doing in those is they're selling an option, a call option that's 7 or 8% out of the money for a year out or 2 years, depending on which one it is. If it's 2 years, they go like 15% out of the money. They sell that call option, and it's exactly the amount of money they need to buy an at the money put option. So that at the money put option eliminates any chance of loss if you hold till the end of the term. But anyway, so that's the ones I like. All right, what's this? 80% in ULTY and 20% the rest. Hey, Mark, how are you doing? I'm glad you're up 5% today. That's awesome. You saw what I was up 1, or my model portfolio. My Vanguard and passive stuff is probably doing all right too, but I don't ever count that. That's awesome, Rob. Was there Drex? I'm sorry I missed that. I was just looking through Twitter or not Twitter, the YouTube feed, and I saw that. Anyway, I wanted to check out BMAX, and I thought it might be something interesting to talk about. But Bitcoin, I'm not that interested in, and it's also what corporate structured, something that I'm sure it's the greatest thing ever when Bitcoin's going up. I just don't know that much about it. So let's talk about some other stuff. Grateful Trader, what was that stuff you were wanting me to check out? Then also we're going to look at this dark pool here. Let's see what's going on. Okay, so these were a day ago. Look at all these highly unusual trades a day ago. Why didn't I see these a day ago and do something on? I did see them, but I mean, my gosh, I mean, selling puts on the spider, selling puts, and this, that there's somebody a day ago, or no, 7 days ago, selling calls and nuggets. So maybe gold's getting kind of close to the top, because I've been seeing some bearish stuff in here too, in relationship to gold. But some of these happened 6 and 7 days ago. So let me just try to do it. Let's just do it sending time since the most recent big trades. So these are a minute ago, and it's bullish stuff on the SPY, of course, but I mean, that doesn't help us now. It'd been nice to know. It probably is. This pullback is probably great to buy the SPY for tomorrow. Maybe we should look at a SPY trade or something. What day is it? Wednesday? I don't know, but there is a lot of bullish stuff on it's all bullish. I mean, there's a few bearish, but none of it's unusual on the unusual meter over here. I'm going to click to sort by unusualness and see if any of those happen today. Now, all right, well, let's see what else. Let's see what Trends AI is telling us. I want to do maybe a broken wing butterfly that inspired or something. Or maybe a trade in Google. I'm looking to put on a trade myself. I thought we could find one in here. Anyway, so let's see what's on Breakout Watch. Oh, the new one. And it could be, you know me, if I see anything under, if I see anything under 20, I or 30 or 40, I say will candidate. If there's ever a max drinking game, will candidate would be one of the things that I say all the time. Anyway, will candidate, right? I've never even heard of it, but I mean, well, I've never heard of any of these, but biotech companies, I don't know, but I just don't really understand biotech. But man, they made a couple of good calls already, breaking out at 2, and it's already at 3 almost. Anyway, Pluri. So let's just check this out, Pluri. Let's just check out this tool. So we'll go to the trades, or no, I'm sorry, the visualizer. And we can actually see how the AI is done in the visualizer. This is pretty cool, because it'll show us as soon as it comes up, it'll show us should anyway. I'm glad your PLTY is green. The market stays up. Good job, Mark. I'll look. Yeah. Grateful Trader. We'll look at those in a second. Once I weave back out of options and weave back into high yield land, starting or actually buying down margin. Congratulations, Mark. It was a tough couple of weeks. Hopefully, it's behind us now. I mean, it would have been. The thing is, it's easy to say it's behind us now when we're freaking a long way off the bottom. Why can't I ever know that a week ago? Or why couldn't have I even known that 3 days, 5 days? Anyway. And you still can't know it for sure, but I'm just, for you guys that do a lot of option selling, poor man's covered calls and stuff. It just helps so much if you have a market that's going up. And so anyway, I think we'll be back in business soon. All right. I'm just kind of stalling, trying to wait for this thing to cut. So here's this fund called Plur, it's still not coming up. Oh gosh. Okay. Well, anyway, whatever. So, maybe we'll skip the Trends AI. I just thought, is it not? All right, I'm just going to have to go the old-fashioned way and not use AI. Let's do this. Let's look at something bullish. And I got a pairs trade. Let's do this. And I think some people did this one also. If you did this IBIT butterfly, we're going for 55 on that. Probably time to take that off. Let's do this. Let's do something similar in Google. Let's do. I just like Google for some reason. It has really good options. It's pulled back. Now let's look at the chart. Plus, I'm just looking for something that should benefit by the market. If the SPY can go from here to here by next Friday, which is what I'm thinking, it may go to here first. You can. Lots of times it will check the previous point of control or the previous trading range. I'm hoping that's what happened a few days ago when it checked this trading range at 430. I didn't know it at the time, but lots of times it will check a previous trading range. Anyway, so even though now we're at this trading range at 450, and it looks like we're pretty securely there. Now we could drop down and maybe check this one again, but I think ultimately the risk is to the upside or whatever. So, but anyway, I want to find a stock that if the indexes go up there, should benefit. So let's look at, I don't know. Let's just do it directly. I just want to show, let's just do it directly. Let's do the SPY for next week or for the end of the month. Okay. And so here's the expected move right here. This one standard deviation expected move on the upside is 556. Hang on just a second. I appreciate your patience. Google has earnings also. So, yeah, this probably isn't the best trade because this is just a directional trade. This is a trade that Google goes up and starts rallying. But I need to do something. But this is a debit, and we need to do something that burns freaking theta. So this wasn't, or this is SPY though. Okay, well, this will work. On SPY or so, yeah, I was back to Google. On SPY or something, something like this. Look at this. 340 to make 1,000, 3 to 1, aiming for that. Let me try one other thing. Let me try to put the wrist to the other side and see if I can. I don't know. I just don't like that. I just don't like that. Yeah. Try to make it. I'm going to try to make it triple. Something like that. That's a way to play the SPY going higher into the end of the month. But I don't know. I don't like that either. I always get on here between shows and I look at the trade and I think I like this. This should be something good to show on the live stream. Then sometimes I get there and I just don't like it. All I'm trying to say is maybe we should look shorter term. I just think that maybe we should do this. Let's do something to Qs. Hang on. I got another idea. All right. Something that 23, 24, 25. Maybe the Qs for Friday. Just to maybe a trade where we just get stuck here, but we don't get penalized if we go higher. Something like that. Yeah, and you could, yeah. Now that's not the worst. Risk 230. Do it for debit. Okay. Let me show you guys a trick. That's with calls. You just switch everything to puts. Same strikes. It's because of put call parity. It's the same trade, but you can do it for a credit instead of a debit, or it's roughly the same trade. It could be a little bit different because of small pricing differences, but risk reward is generally the same. So we just want the market not to move too much. Let me mess with a few variations on this. And I was trying to make the payoff a little bit bigger. The first idea is better. Make 100 trade out. Take this is a take right to dinner trade. Risk $683. You have a 70% chance of making some money on this trade. You get $118 credit per contract. If the market goes nowhere, in other words, gets stuck at this trading range, or at least doesn't trade less than 450 by Friday, or finish there by Friday. So we just want to keep them 450s right here. So 450 is this gap area on this chart, this no man's zone anyway. Even if it does trade down there, I would expect it to go through to this other one or to bounce back. We expect it to get kind of stuck in the high volume nodes, and we're aiming for it to get stuck on 459. So yeah, they just can't go lower than 450. So, but if it goes higher, we don't get penalized. But if it goes up to 477, and which is what we think is more likely, that'll work too. Okay, so that's the trade. I know that's not the best. I know that's not the best trade of the day, but that's it. It is what it is. Now I'll look at that ETF stuff that Grateful Trader, the Grateful Trader wants me to look at. That's a good looking trade right there, but that's not the one we're talking about. What does it say trade on that? I'll put it in the comments in case you guys want. And yes, we'll look at Grateful Trader. We'll look at CLSC and that stuff you want to look at. And I'll answer questions if you guys have questions. And I'll try not to leave so much. Where is the darn? Here we go. Boom. But yeah, once I was learning options from somebody, a pro trader, a market maker, and there's a video I think I bought or something 5 years ago. But he said in options you can either make trades or strategies where you expect the market to move but to stay within a parameter, or you can make trades where you're expecting, the market to go outside of the parameter. But that's the whole thing. You either inside, outside. You're either long vol, short vol. On that last trade I showed you guys with SPY, it's a short volatility trade. We're trying to bring in an income, get a little theta decay, have a little buffer. The market can drop a little bit before we start to lose money. Even if the market goes up, which is what we expect, we still get to make the income and we get a little consolation prize. That's an example of a bullish trade. But we aren't asking the market to do anything. We just are asking them not to be bearish, not to be, So I love that kind of trade. Anyway, it's there for you guys if you want to see it. Mess with those strikes a little bit and get in your own broker. Hit me up on Discord. You probably get a little bit better risk reward if you mess with it. But anyway, I think there's a good chance we either stay here or bounce and get a bounce tomorrow. So anyway, we'll see. All right. All right, so PLTY versus PLTW. I'll take that one, then I'll go back on some of the other ones. All right, PLTY. So the way, let's see, PLTY. Let's look this way. I usually show you guys to look at it on FinViz, but when we want to compare, this stock analysis works to compare, and then where I put the compare, there it is, PLTY. And then what a lot of people will do is put PLTR on there also. Not like we expected to, but I just hate when people say, yeah, it just doesn't do as well. Yeah, it doesn't, does it? But still put it on there to figure out how much less well it does, because it makes a difference. The other thing about these things is sometimes when you put in PL, whatever, you see, I can find ETFs I didn't know about by looking at the suggestions. PLT. Oh, yeah, let's put in PLT. Oh, yeah, it doesn't have PLTR because it's not an ETF. This is only for ETF comparisons. Okay. Well, anyway, the thing is they've only been around a short time. Let's do a month. Okay, we got a month on them. It looks just about the same. I mean, one's down 2 and one's flat. But, I mean, here's what I'm going to tell you just by knowing Round Hill and I don't know. I'd have to look at the prospectus. I'm trying to think. YieldMax is doing weekly options. Round Hill is doing weekly because it said weekly in the title. These should probably be roughly the same. Because the thing is with weekly options and with single stocks, there's no way to kind of game the system. The way Round Hill did the XDT and QDTE is a little special insider secret, gaming the system, taking advantage of the night effect by doing one-day options, but waiting to do them till the morning. It's a good little trick. I've racked my brain trying to think if there was a way that a company could adopt the same methodology to single stocks. Now, the problem with single stocks are you don't have daily expirations, right? You know, the daily expirations are what makes it, am I sharing the screen? Oh, yeah, I am. Not like there's anything with it. The daily expirations are what makes it work. But also what makes it work is even though selling options is a good thing and we all like it and stuff, they're selling options, but they're selling less of it. Basically, they're just doing it time wise. It's no different than a fund that only writes on half the portfolio. It's options are great, but they do it on half the portfolio, leave a little upside. Round Hill figured out how to do that in an index fund, but leave a little time open, the time at night, which is a crucial time. So on single, so I don't know if there's a strategy. I've thought about it before, and this is stupid, but I mean, you could do the single stock ones. You could, come out with the fund around Hill and maybe just sell options Wednesday through Friday. I don't know. It would be different because but I'm saying, in other words, sell less, or you could also just sell half, which would be the other way to do it. But, maybe you could only write options on, half the week and then you're uncovered half the week. It'd be stupid. I know no one would do it that way, but there's what I'm trying to say. So I don't think there's really a way to do the same kind of little money hack that they found with the indexes with the single stocks. Now, when they have everyday expirations, and the first one to get those will probably be Tesla. I bet they do have daily option expirations on Tesla in Europe with different things, with different kind. I wouldn't be surprised. I've heard they do. But anyway, but here in America, I bet someday we'll have daily options on Tesla. I would imagine. And at that point, then maybe somebody can take advantage of the night effect in the daily options as well. All right. What are you saying, Mark? You have a trend line drawn downward from all-time high. Think it's going to take some work it is going to take some work. So it probably will happen even if the Bulls do break it. And you know me, I know the Bulls, I'm big, go Bulls, go America. Even they break it, it may take a few times. So that's why I always say that these areas where there's gaps, and I see bears should be there, especially the first time, or maybe the first and second time. Eventually, the idea is they'll eat through the orders and you'll take it out. But so those can make great little trades, where you play for a pullback anyway. That even though I like that. I like that, and especially I like the way we look at. I like the charts I'm showing you guys, and I like the way we're looking at the price by volume. It's just a really great way to look at the price, where we see all the price where the actual business occurs. It's the market's an algorithm it's price discovery algorithm, and that's all it's looking for, assuming it's freely traded and not manipulated. But to the extent that it's freely traded, all it's doing is trying to find fair price. It goes too high, then it's too high, then it's too low. But so the trail that it leaves, or the way we can look at it and kind of visualize it, is with those volume profiles. And I see stuff like I notice stuff that I wouldn't notice before. So for whatever reason, it looks like TradeVision's having is the dark pool's not working. Looks like the dark pool has gone dark. So that's a good stock. Danaher Corporation just gave a bullish signal. Now look, here's up here in the corner, it says Trends AI, and that's their AI system. It shows how it's been doing. It's down 12%, but buy and hold's down 37%. But you can see every previous trade. This AI doesn't short. It's either long or out. So green is long, and you can see it went long there. That's a bad trade. But then it went out, and it missed a lot of the downside. Then it went long there. Bad trade. It went out and missed a lot of the downside. Now it's going long again. One of these days, I might get it right. I mean, we're here at a double bottom. I mean, you can see back here that, the AI called long and rode it from 203 up to 244. This is a good stock on a double bottom. Maybe this would have been a good bullish. Go out a month or something, or 6 weeks, do like a tasty trade type thing, do one of my trades, a 3-leg risk reversal a month out, and go for a turnaround in this kind of stock. This might be good, or something else. And I talked about this a little bit on lunch, but I think Tesla might be all right here. If a guy wanted to make some kind of leverage bet in Tesla's recovery. And there's a jillion ways to do it. At lunch, I showed I forget, or not lunch. It was a breakfast. I'm sorry. Or it's actually lunch for you guys. You probably. So let's kind of look at Tesla's price by volume and see where higher trading ranges. Where could bulls be comfortable? Where's the two-way action higher? So 271. But I'm thinking a lot higher. Where is there any two-way action a lot higher? So there is. There was a little bit. 301, and there was a huge gap down. But the real bullish action is 353, 391. All right. Well, it's going to be a taller getting through that gap. The first time getting to that gap, I would imagine there'll be sellers there. But anyway, 352. Let's look at 352. We could also just put on a trade for next week, or maybe for Friday, going for 272. That might be a trade. I mean, assuming I'm just trying to look at a bullish scenario type something, and the market turns around and starts going up, and and he's out of the government business and back in the rocket business and the car business. It could be a good thing. So, let's do this. Oh, that's not good. All right. Let's do this for tomorrow. Let's do a I already forgot. What's the target? 270. I think it's 270. We move the short put in a butterfly. You have longs and you have shorts. It's spread, but you move the short option. It could be calls too, but to the place where you want max profit to be. So 270. Now what's 270? It was 270, right? Or it's 279 actually, wasn't it? Because there's a big no man's land here where we don't expect it to trade. I would expect it to either fall back to 247. Or the bullish case would be, to get it up here in this higher trading range. There's a higher trading range the bulls are trying to get it in. It's actually 273. Anyway, okay, it doesn't have to be exact. But this actually, maybe 275, maybe make it a little bit more a higher payoff. And then maybe do. You can do trades like this easily in Tesla and NVIDIA and Planeteer because they have such liquid options. Look at this option. I'm trying to sell it. It's bid at $22, asked at $21.80. It's only a 20-cent spread on a $20, option. Then this other one down here is 50 or 35 cents, and this other one. Anyway, it's good considering how expensive are. This is a dime. Bid $5.90, ask $6. I mean, take that all day long. Let me just keep messing with this. I don't want to risk a whole lot of money on this. It's just kind of a fun. $250, make 1,000 possibly. I mean, it's a YOLO. It's a total YOLO. Not the worst YOLO I've ever seen. We're aiming for that higher trading range by tomorrow or by 2 days from now. All right, I'm going to put that one in the link because you guys might want to do that one. There's nothing wrong with that one. Which window is the gosh darn thing opening? There it is. All right. That's not the worst trade I've ever seen. All right, but let me show you guys, just because the people that are here are probably interested. So let's say we did want to make a more aggressive one, and we wanted to go out for that higher number. What was the higher number here? We say, heck no, Elon's back, Tesla, well, it's 350, but we want to choose a time. I never used to know how to do this. We want to choose a time that's somewhat realistic to target 350. I never did figure this out, but here's the way I would do this nowadays. So we want to target 350 in Tesla. So what I would do is pull up a thing here and leave the butterfly on, but move it out a month. We'll save this as a different trade. Okay, just to say, move it out a month, and then we look at the ghost or the probability cone, and right where the hash mark is the first standard deviation. So this is saying 300, and even a 2 standard deviation move, which can happen, is 350, and a 3 standard deviation move is 400. Okay, so this may not be bad. You'd be betting on a 2 standard deviation move to get to 350. Let's see what we could do. This is going to cost you more money. The other one, what was it, $100 or something? This one's 1,000, but it goes out further. So this one right here, you don't have to go. It doesn't have to get to 350. In fact, it would be better if it didn't. In reality, the way this would work is you're going to take it into, about 3/4 of the way or whatever, typically, and then at that point you would probably take your profit if you had one and roll it. But $1,000 risk, and you're trying to make, if you hit it perfect and you get to that 350, it's $2,000 to 2,300, depending on when it gets there. If it gets to 350 anyway, and if it gets something like that, that's a decent way, in my opinion, to make an asymmetric play. So, and that's a longer play. So I guess I had to put on here targets 350. Then I'm going to save this as a new trade so don't mess up the other one. And then if some of you guys more want like a longer term swing trade, that might be a better one for you. There you go. All right. So best hedge equity, like I say, I don't know. I'm glad you're up, Mark. Oh, yes, CLSC and FTLS. Grateful Trader, if you're still around, or anyone else is that wants to talk ETFs. Let's see here. Oh, we could do it this way, I guess. Here's something else, Grateful Trader. Here's another trick I want to show you. Of course, you can compare you can compare this way, of course. We already talked about that. FTLS. Lots of times they'll show peers. When you're looking at one of these, it will say peers. But now that I brought up a comparison, it's, well, oh, maybe not. Maybe it's on a different one. First Trust long short. So we want to compare that. Oh yeah, we want to compare that with, what was the other one? Well, we could use EQLS, market neutral. We could compare with BTAL, which isn't really market neutral. It's anti-beta, but it's, what about Dorsey Wright short? That's a good fun. And what about old chaos here? Okay, so let's compare these right here. What's the number one right here? Geez, 13% is green. That's the Dorsey Wright one. Wow, that's impressive. Purple, that's BTAL, is second on total return. But those are good. These funds are good. That's why I like that Dorsey Wright so much. You could see just comparing these two. I mean, they look almost like they're inverse of each other. I don't know. I'd have to look at the long short. They're the same. They're the same idea. They're the same idea. They just leverage up part of their portfolio long. They use a little bit of leverage to do long short. They leverage up some long and then some short, but then between the two of them, they're neutral. So that, but they use leverage in a way, not really to get access to the leverage itself, but just so that to make a pairs trade. Let me show you this EQLS. If you're ever looking for something, here's where I think it says it. Where does it say? I swear it says it here somewhere. This is financecharts.com. Maybe this is what I was thinking of. I'm trying to show this to Ethan. I don't even know if Ethan's still here, but there it is. Any fund you type, like you're really interested lately in hedged equity funds, right? So you type in EQLS or you're interested in long short, it shows you peers. And then not only that, the peers metrics. So here's EQLS. Well, heck, it only has 4.8 million. Why wouldn't I rather go with, BTAL has 500 million. And I've never even heard of this one. Timothy Plan, market neutral. Timothy Plan. I mean, okay. I mean, this is always why I stay up late, because then I have to go check out what the Timothy Plan, market neutral, is. And it's probably some family office, some guy named Timothy that's just smarter than anything. And he's turned his family office into an ETF. There's a jillion of these things out here. And, it's a great time to be an investor. He probably has a market neutral. I would love there someday, maybe there'll be a max convexity GOAT. I'm telling you, my GOAT strategy, my GOAT ETF strategy beats anything else in the Tasty Trade backtester. And somebody needs to come out with an ETF. They have Meet Kevin has an ETF called, and it went out of business, called, it has to do with pricing power, or something that he knows a lot about or talks about. My fund's a long volatility fund, go figure, but anyway, then it doesn't bleed. It's a long volatility fund that does not bleed. All right. But anyway, I would always look at these peer metrics. Those are good places to look at. I'm just not that interested in long short. Like I was saying in Discord, I'm my own long short by just trying to stay balanced with my option trades. But just as far as ETFs go, I don't know. But I do like the BTAL a lot. I'm not that into long short, but something like BTAL or Chaos or even something like TEL, even though TEL bleeds, if you know the market's going to go down, what those funds are good for So maybe a guy that's scared about the market going down, or maybe knows the market's going to go down, but doesn't have an option account, just has equities. Maybe can't short either. You don't have shorting permissions, but you can always buy SQQQ, even if you don't have options, even if you don't have shorting permissions, and it gives you access to short NASDAQ. So it's like I always say, it is a great time to be an investor. I mean, I just could not be a better time to be an investor. I couldn't imagine the way it used to be. I used to sit around and dream about all the stuff we're doing now. I used to sit around and hear hedge fund guys talk about, I'm not that long ago, 5 years ago. Well, we have our hedge fund, we're doing a call overwrite, which is cover call. We got our call overwrite going on, and we've got they talk about stuff they have on, and we're, and then we're 20% short or something. And I was like, I want to be 20% short, but there's no way for retail to be 20% short using a call overwrite program also. Well, there is now, because you can have 20% YQQQ. And then it's the same thing. It's like a hedge fund. Now you're shorting puts, and you can monetize the market grinding lower. So, like I say, I couldn't imagine being a trader some other time. Anyway, Grateful Trader, I'm glad you're here. I figured you're here. There's only 6 of you guys here. I appreciate you guys being here. I probably won't have a show on at the end of the day, because why bother? We're just about there. It's 2:29. What's going on is Tesla. Why is Tesla selling off into the close? We don't want to see that. Come on. But I kind of expect it, to see this like dead spot on the chart. It's where a gap, it's not even a gap. It's just wherever it's a place that repels price. There's not two-way action there. For whatever reason, when prices get to that point, there's only one-way action. Lots of times it's maybe stop losses or something, but it's not two-way action. Price wants to attract back to the two-way action, like a magnet, and that's right here at 248. However, those trades, it's fine if price attracts here. That's fine, but I do think that I'm hoping that in the next couple of days we can attract on up to 272. Now let me show you. Let's look at this on this Bitcoin trade. I just love the way this. I love the way this theta decay is working in this trade. Look, this trade's worth if somebody did it, and I think one person did it that I talked to, or did something similar, you could take it off for $199. But if you wait, you could take it off for $216. But if it happens to go up just a little bit, because time is decaying also out of this 55 strike option is what you wrote. That's where max profit is. So the closer it goes to that without going over, the better. But this, if you had this trade on, you could wait, because there's not a lot of downside. I mean, if it drops 1%, you'd still make $160. But if it happens to go up 1% between now and Friday, you aren't up 230. No, not you're up. It's just because of the asymmetry, the convexity, or it's because of the theta decay. You're up 273. So so that trade worked out good. But if you have it on, it's probably time to take it off. And if you put on the hedge one also, it's down $100. Sorry about that. But if the market would have cratered, you'd have been glad you had it on. Hopefully you can squeeze some money out between the two of them. You aren't going to take calls here today. I got you. Maybe you already have enough calls. I wasn't getting them a few days ago. Why wasn't I buying a few days ago? I'm kind of late to the party, but I need some exposure, some bullish exposure. I don't know though, but also that maybe that Tesla, the second Tesla trade, or the first Tesla trade I showed you was pretty good, or the first SPY trade. Maybe we just hang on. I want to show one more trade. Maybe this is the best trade. And I used to do these trades all the time, but as soon as I would put it on, I would put a stop or I would put a profit target in for $100 profit. And I would do it on SPX because it's a big contract and it moves fast, and do a butterfly. And if the market doesn't move too far, within a couple of hours, you'll hit your, and do it. I would do it on 0DTs, and you would do it within a couple of hours, you'll hit your $100 profit and it'll take it out. But if the market moves, it won't, it'll go and make a loss. But anyway, all right. So here's a way if a guy thinks the market's just going to kind of get stuck here and trade here for a while. I could totally see that. So this is by Friday. Now they're showing the expected move by Friday, either down 2.7 or up 2.7%. So it's not like this is the greatest trade. It looks like it's more likely than not to be a loss. Look, the chance of profit's only 24%. It's just that you don't have very much risk. And if it doesn't move, you can make an asymmetric return. Let's scoot this out a little bit. I just like to put the risk off to one side and do something like that. You could do that right there for a credit. It's similar to the one I showed you a little while ago. Or you could just do a really wide butterfly. Now you have your chance of profit up to 47%. It's a $600 debit. I just don't like trades betting on nothing to happen. Like I say, I'll generally just do something, just pick away and put the risk to one side and do something like that. In this trade, you're still hoping for something. If nothing happens, that's the best outcome for this. But the $109 credits you're planning on keeping no matter what. That's really what you're playing for. You're really playing for this $100 credit on $600 in 2 days. That's actually not a bad trade. I need to get out of here and do that trade myself. That's a good trade right there. But on the SPX, it'd be better to do it on if you can afford to, because it's bigger. I don't want to lose $3,200. If that's the thing about SPX, it's better, but I'd rather not lose $3,200. So let's go to a chart of SPX to show you how I do this. Or actually, I want to go to this chart. But yeah, Mark, I get if you aren't getting calls here. I mean, that's the other great thing about the market is you and I can have totally different opinions and we can both make money because you're looking at a 5-minute time frame and I'm looking at a daily time frame. Or you're looking at and your stop loss and your parameters for, and maybe you have more money than I do. And for the amount of money you have, that you're making the right decision for you. So anyway, so getting stuck here would be 5,300 on the 5,393 or 5,400. So so 5,390 or 5,400. I could do 5,395, split the difference, put it right there, make no risk to the upside, and then set the downside on how much risk I'm comfortable with. $1,000. That's more like it. Especially when I'm getting a credit of $400 immediately, I really can even do it a little better than that. Yeah, I'm going to go do this trade in real life. Or I may don't do it just because I don't. But I don't know. Yeah, but what you're expecting is just the market to basically go nowhere. It would have to rally a little bit from where it's at here because we sold off at the end of the day. But you would just want to get. I want to make at least $100. I mean, or $200 on a bet of this size. So to make 200 by the end of the time, so if you're going to take it off a little bit early, you need at least 53.83. Let me see what we're 53.83. So I'll put this line on the chart. If you're making that play, What you're asking the market to do is go above this line and finish above this line by Friday, and you'll get you'll make at least a couple $100. So that's not the worst thing to do. If it, it could always fall through here, but I'm really expecting buyers to be here in this big bullish gap. So we'll see. We shall see. Now Mark's taking the other side of it. He's not getting any calls here, and so I see what you're saying. But like I say, it's all good. It is cool. The other thing is Mark can be bullish about something. I can be bearish about something, and we can both be wrong. And that's the other frustrating thing. You're thinking one of us got to be right. No, maybe not, because I'm looking at the 30-minute time frame playing with a certain stop loss. Mark's looking at the weekly time frame playing with the different stop loss. Both of our trades might have been the right directional trade, but we get our stops hit. And I mean, that's the thing about the market's such a giant place. There's plenty of room for us all to make money or not. Now, so what's Mark talking about here? On a 5-minute chart, the SPY is the strangest thing I've ever seen. Nearly every candle has a wick up to 540. Let's look at that. I don't really look at 5-minute charts that much. But let's go back to SPY. And let's switch it down to 5 minutes. I do sometimes to look at the volume to get more granular look at the volume. You can see trading ranges within trading ranges. I always do that. Gosh darn it. Come on. What is going on? All right. All right. So let's look at these wicks. I don't know. This trading view may not be the. Oh, yeah. Look at that. Good observation, Mark. I mean, what the heck? Okay. So maybe algos or something. The algos are mechanically selling every rally or something. I mean, that's what it looks like. Because at least in the, the 5-minute chart is super bearish. I mean, somebody that's trading the 5-minute chart might short futures right here, cover them in an hour, make $1,000. But I might buy calls for Friday, make $1,000 on Friday. Or I might sell a butterfly where if the market doesn't move, I'll make $1,000. I might make $1,000. The market didn't move, but it moved down enough for the guy that's trading 5 minutes to scalp $1,000 off it. It's the market. What I'm saying is the market's such a big playground. There's plenty of room for all of us, for us all. We aren't all competing, especially in the S&P. You aren't competing. There's plenty of money to be had to go around. It's not like you're competing with each other. And if Mark does good, it means I have to do bad. I mean, I guess in theory, but I mean, it not really, not in practice. Not in practice. All right, Mark, you're saying Max Rewards good. Why not take it? Yeah. Yeah, those wicks are crazy. Yeah, we can both be right and both be wrong. Exactly. Mark said it too, probably before me. But I'll just go with Mark. I'm just picking on Mark because he's here, but it could be anyone. Computers trading against each other. Yeah. Yeah. Buy more Alti. We haven't looked at Alti by itself in a while. Alti's as an income plan. It's I mean, there's a hidden cost in Alti, and that's so. Well, first of all, the great thing about Alti is just look at it compared to its moving averages. The very lowest moving average, it just crossed over right now, so that's probably the fastest moving average. But that's awesome. There was a time back November and December of 2024 and January for a while where it was trading at or above and right around the moving averages, really for a couple of months. Hopefully we're getting back up into that kind of trend. That's what would happen if the market itself goes back into a bull trend. Of course, this isn't going to ever go up really, but it'll hang right at the moving averages and keep paying the yield. But then whenever the market pulls back, it pulls back. The only reason I'm talking about the moving averages, they don't help. I don't look at them. I don't believe in moving averages, crosses or whatever. But it's the only way I found to quantify, because I don't do the point and figure charting, but it's the only way I found to quantify the momentum of these high yield funds. And the ones that pay really high payments like ULTY and even YMAX, they're always going to slope this way, or ULTY and maybe like LFGY or STM. But the higher paying ones are almost always going to slope this way. You just want to find the ones that slope that are not sloped as bad as the other ones. The thing is, there's no way to know in advance unless you knew how the parent asset was going to do. Because the only thing that made ULTY do better for a few months here. Well, one thing in October, they did switch the formula, and switching the formula on October 15th, that helped. You can see from October 15th, they went sideways, almost to 2025, but they made it, a couple of months with just going basically straight sideways. They even were over all of the moving averages for one day, which hardly ever happens. That's what we would expect. That's what I would expect if the market starts face ripping to the upside again. If you remember what was going on back then, it was after the Trump victory, the market was face ripping to the upside. So we kind of got the dual goodie of getting the dividend. There's the dividend, 83 cents. The week before or the month before is 82. The month after that, it was 70. We got kind of the dual thing of, heck, we got the dividend and our NAV didn't go down. On these really high paying funds, we expect the NAV to go down a little bit, but the dividend pays so much it makes up for it. But you get into a really good market like that where the market face rips, you can, these funds, it can even go sideways for a while. So what's the 5-minute chart doing? Is it stabilized? Well, it looks like a double bottom to me. I like the chart I was looking at better because with the 5-minute chart introduces too many different strikes. Now I'm thinking of different, but now I'm thinking of this thing. The fair value of this is it's either a 540 or 525. Bulls and bears are fighting over that, but there's a third pot. There's always the possibility that it does stay here and it builds out volume here, and this turns into the new high volume node also. But we'll see. We'll see. You can see what this red line is tracking. This red line is tracking previous POCs. A POC is a point of control. The market was up here. That's where the POC was. And then the market sold off. But where did it sell to? Remember how I was saying it checks previous points of control? Sure enough, where did it go to? It overshot a little bit, but it settled. Where did it settle? Right back? Previous point of control. 525, traded there for a while. And then this red line goes. That means the POC migrated. This was no longer the heaviest volume because volume was building out here, and this became the new POC. It's called POC migration. Well, anyway, so now we've established that the market's comfortable at this trading range. Now all they're doing is they're going back up here to this 542. If bulls are comfortable there, we'll hit the next one and up the road, wherever that may be. You can't see it on the 5-minute chart because there's not enough resolution. So you can pull on an hour chart or something here. And we've already looked. It's 573 or something, or that was on Tesla. I'm getting confused between Tesla and SPY, or Tesla had a higher POC that we looked at. On this one, we haven't yet, but it has one. I promise. And there it is. That's the bulls are trying to get it there, 567, but it's going to be a tall order. There's a small trading range right here at 560. So that would be first. 560 be first target, then 568 be next target. The first dip buy area is where we're at now. The second dip buy area would be down here at this other previous gap. And then if we get under there, it's not good. But hopefully that's not going to happen. What do they say? Hope's not a strategy. Your wishing's not. I saw that on another podcast the other day. Hope's not a strategy or something. And boy, that is true. Boy, that is so true. All right. So Max, you're agreeing with me. Matt, this looks like Mark and I agree quite a bit. We're on the same page. And I think I'm on the same page with Grateful Trader on a lot of issues also. Um, yeah, exactly, Max. I don't have to buy today or tomorrow anytime. Waiting for a good setup. Yeah. And you can't make $1,000 a day on a good setup. Sometimes you can't even make $1,000. I mean, and sometimes you make a fat finger mistake. One time I did something that I shouldn't have done. I didn't have any edge in. I did it. I didn't really know what I was doing. It was a spread that it made a lot of money. And I thought, anyway, then I kept thinking, okay, it's because there's not an edge. And I just got lucky. But yeah, but that's the thing with options, especially sometimes what I'm trying to say, when you're with options, especially when you're selling options, the theta part of it might even bail you out if you're totally wrong about the other components. That's always what I'm trying to lean on also. And it doesn't always, sometimes that element of it bites you in the butt too. So, all right, guys. Well, I guess I'm going to get out here. It's 2:48. But yeah, you got to love when a fat finger play makes money. Or I'm maybe not a fat. I was thinking if a trade wasn't really a fat finger, but it's a trade really I wouldn't have done if I would have studied it a little bit more. It's impulsive. Let's just say impulsive. An impulsive trade that makes money that I'm all sold on. And then and I look at it that night and look at what I was really looking at. And it's, yeah. All right, guys. I appreciate y'all for being here. I will hit me up in Discord if you want to talk, and I'll be around. All right. Later, Mark, and later the other 6 of you that are here. I appreciate you guys as well. Have a good day.